Joe pointed out at the top at the introduction that you're the former chairman of the Atlanta Fed. As somebody who's running an energy company and probably has a pretty good feel of what the economy looks like in the markets you serve, and as somebody who's used to providing some of that input and data to the Fed, what do you think the Fed should be doing today?
Listen, in fact, I was also chair of what they call the Conference of Chairs. It's kind of an advisory board to the big Fed up in D.C. and was there at the time of the transition from Yellen to Powell. I know Jay Powell exceedingly well, and he is a terrific guy. Here's my sense. I know we get into a lot of short-termism when we talk about the actions of the Fed. The Fed, is, I think, really focused on long-term results, and they do analyze reams of data and not just take data, but turn it into information and insight. And I believe what they do is they try to take a long-term perspective. I believe that probably with the plateauing, this pause that we're seeing until we resolve some of the uncertainty in the worldwide markets, that probably a 25% cut makes a lot of sense. But I really do trust in the process of the Fed. I really do believe in that institution.
Steve Leisman raised the point earlier that the data doesn't look that different today than it did in December when they decided to go ahead and raise rates. Are there other things they're looking at, or are we not as data dependent as we used to be? Are we paying more attention to the markets?
Yeah, Becky, I don't believe they're paying attention to the markets. Here again, that's the short-term. And when you asked the question, you asked it exactly right. The data today, okay? But the data I think that the Fed really considers is not just in-period data. It is projections. It is a lot of not only kind of macroeconomic research, but also insight they get from all the districts around the United States. What are people that have boots on the ground seeing in terms of what's happening in the economy? For example, that's why electricity is such a good long-term indicator. We have data that will show it's not just kind of last quarter, last year, or current period. We look at our economic development activity, and we can see that there is, in fact, a bit of a reluctance to commit long-term capital in light of these kind of longer-term uncertainties related to trade. Look, you solve those things, and I think we have the ability to breathe some more oxygen into another potential economic recovery. So I think he's doing the right thing.